Bismillahirrahmanirrahim, dear students. This is the chapter of common stock valuation, and it will help investor for investing in common stock. Certain methods which can be used to for the valuation and understand the foundation of valuation for common stock, discounting cash flow techniques, and the concept of intrinsic value. Additionally, we use the dividend discounted model to estimate intrinsic value of the stock in this chapter, and we'll also try to estimate target price for stock using price earning ratio and earning per share, and recognize the role of relative evaluation matrices in the valuation process. So all these things will help investor or it can also serve as a guideline for investor when they want to invest in a common stock of any stock exchange or common stock of different companies. Now, starting with fundamental analysis, when an investor wants to invest in certain type of stocks or in certain industry, so fundamental analysis is very much important. And there are three type of techniques or three type of approaches which can be used by a potential investor. First of all, discounted cash flow technique. Secondly, earning multiplier approach, and the third one is relative valuation metrics. So, discounting cash flow techniques is associated with cash flow coming from a certain type of an investment. As in the current case, we are talking about common stock. So, in this kind of analysis, what the investor or what the analyst will do is they'll find out that what are potential cash flows would be generated in the near future or up to a certain limit, and after that they'll be discounting that based upon the discounted rate, and based upon that they'll be determining the intrinsic value of a particular stock or particular common stock. Mostly, as you remember, we have done in financial management, in corporate finance, we use dividend discount model because according to textbooks, the potential cash flow which is being generated by common stock is their dividend. So what we'll do in that approach is we'll find out the dividend and what are the expected growth associated with that dividend, and grow it up to a certain limit, and after that discount it to the current price. And majority of time we'll be using this approach in different classes, but this approach is called as a textbook book approach, because actually this dividend is not the only cash flow associated with your common stock. The other cash flow which is associated with common stock is also your capital gain or capital loss, which is the expected price or marketability of your security. And a practitioner mostly use and that kind of approach, not the discounted dividend discounted models. Secondly, the other approach is your earning multiplier approach. Earning multiplier approach is actually associated with finding out that how and how this particular stock will be benefiting you, and how much amount of benefit they will be providing you. So earning multiplier approach attempts to estimate intrinsic value based on estimated earning and a multiplier that is called as the price earning ratio. And in order to implement this approach, a certain type of steps would be involved. First of all, we have to estimate the earning per share for the next period. Then we have to determine the appropriate price earning ratio, and we can compare this price earning ratio with the companies which are working with you or which are working at your strategic level, and or you can also compare it with the other type of industry, like the industry who are leading, or the companies who are leading in your company, in your industry, and many other approaches can be used. Then multiply the estimated EPS by the price earning ratio that has been determined. So the end result is an estimate of the intrinsic value of the stock or the estimated value of the stock today. So this kind of approach can be used. Third approach can be used in cases when the investor is potential enough to purchase a security, and they are actually intended to buy securities, not they just don't want to just value the security, they are actually planning to buy that security. So in that case they'll use different type of valuation methods. They can use price earning ratio, they can use price book value ratio, or they can also use sales price ratio, or they can use many other type of ratios in order to ascertain the true value of that security, because their potential investment is involved in that. तो अब हम इसमें देखें ना, तो हम डिस्काउंटेड कैश फ्लो अप्रोच जो है वो, अगर आपको याद हो, हमने वो जो फ्यूचर वैल्यू प्रेजेंट वैल्यू का कंसेप्ट किया था, तो उसी के साथ ही एसोसिएटेड है. हम इसमें देखते हैं कि अगर हम कोई कॉमन स्टॉक परचेज करना चाह रहे हैं तो उससे रिलेटेड हमें क्या कैश फ्लोज मिलेंगे, कितना कितना अमाउंट ऑफ मनी हमें वो जनरेट करके देगा फ्यूचर पीरियड्स में. टेक्स्ट बुक्स में अगर आप देखें तो हमने मोस्टली डिविडेंड कैश फ्लो, डिविडेंड के कैश फ्लो की हम बात करते हैं, लेकिन जब प्रैक्टिशनर के पॉइंट ऑफ व्यू पे आता है तो फिर वो सिर्फ इसके ऊपर इन्हिसार नहीं करता, बल्कि वो और भी बहुत सारे कैश फ्लोज देखता है, जिसमें पोटेंशियली जो है वो आपका कैपिटल गेन है, जिसमें आप अगर एक स्टॉक आपने 100 रुपीज़ में परचेज किया है और उसको आप अगले साल जो है वो आप 1000 में बेच रहे हो, तो आपको 900 का कैपिटल गेन उसमें हो रहा है. सो वो भी एक पोटेंशियल कैश फ्लो है जो आपको उससे मिलता है. सो ट्रू इंट्रिंसिक वैल्यू कैलकुलेट करने के लिए प्रैक्टिशनर जो है वो सिर्फ डिविडेंड कैश फ्लो पे, डिविडेंड डिस्काउंट मॉडल पे रिलाई नहीं करते, बल्कि वो और भी अप्रोचेस जो है ना वो और भी कैश फ्लोज उससे डिटरमिन करते हैं. देन इसके अलावा और फ्री कैश फ्लोज वगैरह भी और तमाम चीज़ें देखते हैं. देन सेकेंड अप्रोच जो है वो अर्निंग मल्टीप्लायर अप्रोच है, ये जिसको हम प्राइस अर्निंग रेशियो कहते हैं, कि आपका जो स्टॉक आपने परचेज किया है उसका कितना पोटेंशियल है कि वो आपको कितना अर्न करके देगा, उसका अर्निंग मल्टीप्लायर क्या है. फिर थर्डली आप देखते हैं रिलेटिव वैल्यूएशन मैट्रिक्स. रिलेटिव वैल्यूएशन मैट्रिक्स में आप ये क्या करते हैं कि सिर्फ एक मेथड नहीं लेते, बल्कि मुख्तलिफ किस्म के रेशियोज, मुख्तलिफ किस्म की प्रॉफिटेबिलिटी रेशियोज और डिफरेंट अदर रेशियोज लेते हैं, कि इसलिए कि आपका जो इंटेंशन ये है, मतलब आपकी प्लानिंग ये है कि आप चाह रहे हो कि आप स्टॉक को परचेज करो, मतलब सिर्फ वैल्यूएशन के ऊपर आप उसको एंड अप नहीं करें, बल्कि आप जो है वो चाह रहे हो कि आप उसको परचेज करो. तो उसके लिए फिर आप अपने आप को श्योर करने के लिए कि आपके जो भी डिसीजन है रिगार्डिंग द परचेज ऑफ दैट सिक्योरिटी वो एक्यूरेट है या वो सही है, आप मुख्तलिफ अप्रोचेज अप्लाई करते हो और उसके ऊपर रन करते हो और फिर आप उस स्टॉक को वैल्यू करते हो. उसको हम रिलेटिव वैल्यूएशन मैट्रिक्स कहते हैं. Now, when we are using the present value approach, actually in this case we have to find out the discount rate, and then we have to find out the future cash flows, and we have to discount all these cash flows up to today. So over here certain things has to be considered while we are developing or using a present value approach for our security. So in order to estimate the model, or in order to determine the model, first of all we have to estimate the amount and timing of the future cash flows, that what amount of cash flows will be generating for each period, and how much would be the time difference between the first period and second period, and what are different timings of these cash flows. Then secondly, the other thing that is very important is the appropriate discount rate, that how much discount rate you'll be discounting your cash flows. Then when you are using all these components, what we will determine is the value today. Like we have a price, or we have a current price for the security today. After that, what we'll do is we'll find out the future cash flows and discount it up to today, and then compare it with the current price. So based upon that, we will able to determine that whether we are in a position to invest in that security or not, because we are planning to invest in that security. So if the security is not worth enough that it will give us less than what we have today, so it's very much clear that we should not invest in that security. सो लाइक जब हम इसमें बात करते हैं ना प्रेजेंट वैल्यू अप्रोच में, तो प्रेजेंट वैल्यू अप्रोच में आपने करना क्या है, आपने ये देखना है कि किस टाइमिंग से और कितने अमाउंट में आपको कैश फ्लोज जो हैं वो एक सिक्योरिटी से जनरेट हो रहे हैं। ऑब्वियसली ये सारा कुछ फॉरकास्टिंग पर डिपेंड करेगा आपकी। देन उसके बाद उसको आप डिस्काउंट करेंगे, आपके अप्रोप्रिएट डिस्काउंट रेट जो भी आपने डिटर्मिन किया हुआ है, जो भी आपने मुख्तलिफ फैक्ट्स एंड फिगर के साथ किया हुआ है, फिर आप क्या करेंगे, आप देखेंगे आज में उस सिक्योरिटी की क्या प्राइस है और आपको क्या प्राइस जो है वो अभी उसके बाद जो क्या वैल्यू डिटर्मिन हुई है तमाम डिस्काउंटिंग करने के बाद, तो उससे आपको ये पता चल जाएगा कि आज जो आप इन्वेस्ट कर रहे हैं अगले फ्यूचर पीरियड में आपको उतना ही मिलेगा या उससे ज़्यादा मिलेगा या उससे कम मिलेगा। फिर आप उसमें अच्छी पोजीशन में होंगे कि आप जो हैं वो डिटर्मिन करें कि वेदर आपको इसमें इन्वेस्ट करना चाहिए या इन्वेस्ट नहीं करना चाहिए। सो इसके अलावा another thing that is very important is that there are two type of approaches। आपके पास जब हम प्रेजेंट वैल्यू अप्रोच यूज करते हैं या डिस्काउंट कैश फ्लो अप्रोच यूज करते हैं तो हमारे पास दो अप्रोचेस होती हैं। एक तो ये होता है कि हम वैल्यू द इक्विटी ऑफ द फर्म यूजिंग द रिक्वायर्ड रेट ऑफ रिटर्न टू शेयर होल्डर्स, दैट इज कॉल्ड एज द कॉस्ट ऑफ इक्विटी। एंड देन you value the entire firm using the weighted average cost of capital। So what you are using, so then what we'll do is we'll emphasize the factors that go into value common stock. The exact nature of the present value process used by the investor in the market rate depend upon which cash flows are used to value the asset, because we emphasize the stockholders required rate of return। So this discussion of DCF technique concentrate on valuing the equity of the firm। सो हम मोस्टली इसमें जो है ना वो हम या तो आप रिक्वायर्ड रेट ऑफ रिटर्न यूज़ करे होते हैं या आप यूज़ करे होते हैं वेटेड एवरेज और कॉस्ट ऑफ कैपिटल यूज़ करे होते हैं। लेकिन यहाँ पर हम जो हैं ज़्यादातर हमारे जो है वो एस्पेक्ट या ज़्यादातर हमारा एम्फेसिस ये है कि हम ये देखते हैं कि एक कंपनी की इक्विटी को हम किस तरीके से वैल्यू करते हैं, ये फर्म की इक्विटी को किस तरीके से हम वैल्यू कर सकते हैं। तो हमारी अप्रोच जो है ना वो इस चीज़ के ऊपर ज़्यादा एम्फेसाइज है कि हम एंटायर फर्म की बजाय हम जो है ना उसकी इक्विटी फर्म की इक्विटी को हम वैल्यू कर रहे हैं। Now, dividend discount model, as we have discussed in the fundamental analysis, that as the potential cash flow which we will receive from our common stock is the dividend. So for that case, for valuing as common stock, we can use a dividend discount model in which current value of a share of stock is the discounted value of all future dividends, and required rate of return is minimum return that induces investor to buy stock. So mostly two type things can be used. First of all, the dividend, and second is the required rate of return. So the required rate of return is the minimum expected rate of return necessary to induce an investor to buy a particular stock given its risk. Like there are certain risk involved in certain type of security, so based upon that risk, what amount of return the investor wants to have by bearing the certain type of risk. So it is also called as expected rate of return, and that it is the minimum rate necessary to induce purchase. So the required rate of return, capitalization rate and discount rate are interchangeably used terms which are used in valuation analysis. Regardless of their terminologies, it is challenging to determine the precise numerical value to use for particular stock. So in a final analysis, it is the best and an intelligent estimate. मतलब you cannot estimate an accurate value of required rate of return, or so what we'll use is we will use a good estimate or intelligent estimate for this required rate of return. So here is the formula for discounted cash flow, that the value today is dependent upon the dividend which we'll receive in the first period divided by 1 plus a discount rate power 1, that is after the first period, and so is for second and for infinity. So the summarized formula is that the value or the intrinsic value of a stock is the collection of all the discounted cash flow divided by all the cash flow discounted cash flow, which discounted cash is actually the total or the cash or dividend which we will generate from stock in each period of time divided by the discount rate in each period, and after that we will sum up all those cash flows, so we will can determine the intrinsic value of a stock. So अब यहाँ पर अगर आप देखें ना, तो हम डिविडेंड डिस्काउंट मॉडल यूज करते हैं फंडामेंटल एनालिसिस के लिए, क्योंकि यहाँ पर हम लोग जब देखते हैं तो हम कहते हैं कि जी आपका एक जो कॉमन स्टॉक है उसका जो एक जो ट्रूली एक जो आइडेंटिफाइड कैश फ्लो आपको मिल रही है कॉमन स्टॉक से, वो उसका डिविडेंड है। सो हम और उसको हम डिस्काउंट कर देते हैं उसके रिक्वायर्ड रेट ऑफ रिटर्न पे। अब रिक्वायर्ड रेट ऑफ रिटर्न जो है वो आपका एक इंटेलिजेंट एस्टिमेट होगा, मतलब वो आपका 100% जो है वो एक्यूरेट नहीं हो सकता, वो आपने क्योंकि वो रिस्क के साथ एसोसिएटेड है, वो असल में वो रेट है जिसपे आपको आपका जो इन्वेस्टर है वो ले परचेज करने को तैयार हो जाता है आपके स्टॉक को। सो आप उसकी बेसिस के ऊपर फिर आप क्या करते हो कि आप देखते हो कि फ्यूचर में किस किस टाइम पर आपको कितना डिविडेंड मिलेगा, और उसको डिस्काउंट कर देते हो उस पीरियड के साथ, उस पीरियड की जो वो होता है डिस्काउंटेड रेट है उसके बेसिस के ऊपर, और तो आपको जो है वो आज में वैल्यू मिल जाती है आपके स्टॉक की। फिर आप उसको कंपेयर करते हो अपने जो एक्चुअल टुडे प्राइस है उसके साथ, और आप देखते हो कि आपको अगर ये परचेज आप करना चाहो या इसमें इन्वेस्ट करना चाहो तो ये आपके लिए बेनिफिशियल है कि नहीं है। Now, implementing the dividend discount model, whenever we are using dividend discount model, certain things have to be taken into consideration. First of all, you have to see that when we are assessing dividends, or when we are estimating dividends, it must be valued for indefinitely a longer time period, because when people are investing in a common stock, so they are actually becoming a part of their equity, and they want to increase their wealth, so they will try to sustain that stock for a longer period of time, but longer period of time. So when we are assessing dividends, so it should be considered that the common stock is sustained, or common stock is retained by an investor for a longer period of time, and it's not a very difficult task, or practically when we are implementing this assumption, it can be possible by using certain formulas. Then a dividend stream is uncertain. It's also very important that when we are considering dividend associated with common stock, so as compared to bonds and as compared to preferred stock, the dividends declared by the company is not definite. So this dividend stream is uncertain because we are not sure about the future profit of companies. We are just taking the estimate. So it's also very important that you should ascertain the expected dividend coming from the particular security by considering certain perspective associated with that particular company in which you are intended to invest. Then dividend expected to grow over time. And another aspect that is very important is that it's also important that there would be growth in dividends, and estimated growth in dividend can be included in dividend discount model. So there are three cases of dividend growth. One is zero growth models, then second one is constant growth model, and third one is multiple growth model. So जब हम डिविडेंड डिस्काउंट मॉडल को इम्प्लीमेंट करते हैं, उसको यूज करते हैं, तो पहली चीज जो हमने कंसिडर करनी है वो ये करनी है कि हम डिविडेंड को जब अज्यूम कर रहे हैं या जब उसको मेजर कर रहे हैं, तो हम उसको लंबे अरसे के लिए लंगर टाइम पीरियड के लिए मेजर करें, क्योंकि वो आप जो है वो ये आप में एग्जाम्पशन होती है कि वो आप उसको इंडेफिनेट टाइम पीरियड के लिए सस्टेन करेंगे। सेकेंडली, जो आपको डिविडेंड की जो स्ट्रीम है, ये जो डिविडेंड डिक्लेयर किया जाता है कंपनी का, वो आपका हम 100% एक्यूरेट नहीं होता, वो चेंज हो सकता है। फिर थर्ड चीज ये कि ये भी एक्सपेक्टेशन होती है कि डिविडेंड फॉर द पैसेज ऑफ टाइम जो है वो इंक्रीज होगा, ग्रोथ होगा, उसमें ग्रोथ हो सकती है। अब जब हम अपने मॉडल एस्टिमेट करे होते हैं, तो हम फिर तीन तरह की एजम्पशंस लेते हैं। एक तो जीरो ग्रोथ, एक ये सिचुएशन हो सकती है कि कंपनी जो है वो अपने डिविडेंड्स को बिल्कुल इंक्रीज नहीं करेगी, एक एक सेम लेवल पे जाएगी। सेकंड जो है वो कांस्टेंट ग्रोथ है कि एक खास परसेंटेज से वो ग्रो करेंगे उसका डिविडेंड। और जो ये रेयर केस होता है, और ये इस तरह एक्चुअली होता नहीं है, लेकिन फिर भी जब हम मुख्तलिफ सिनेरियोज को देखना चाहते हैं तो फिर हम उसके बीच में कांस्टेंट ग्रोथ भी लेते हैं। देन मल्टीपल ग्रोथ मॉडल, मल्टीपल ग्रोथ मॉडल में आप डिफरेंट ग्रोथ्स जो है वो लेते हैं कि सर्टेन टाइम पीरियड पे इतना होगा, सर्टेन टाइम पे इतना होगा। वो आपकी इकोनॉमिक कंडीशंस पे, आपकी बिजनेस कंडीशंस के ऊपर डिपेंड करता है। वो आप जब एस्टिमेट्स कर रहे होते हैं तो आप उसकी बेसिस के ऊपर फिर इसको देखते हैं। तो मल्टीपल ग्रोथ जो है वो मुख्तलिफ फेजेस में आप अपना मॉडल को कन्वर्ट कर देते हैं और फिर उसके मुताबिक उसको मैयर करते हैं। The first discount model is dividend discount model is zero growth rate model, and when we look into this formula for zero growth dividend discount model, so this formula is very similar to the formula we use for valuation of perpetuity or for the valuation of preferred stock, which is non-callable. So this kind of formula is actually used for zero growth model, because once the dividend is declared and there is no option, there is a zero growth option associated with that. That means that the same amount of dividend would be given to the common stock over a longer period of time. So in that case we will use this kind of formula, that is dividend current dividend divided by required rate of return or discount rate on the discount rate or appropriate discount rate. So the fixed dollar amount of dividend reduces the security to a perpetuity, and like I said that as the dividend is a certain, and we know that this dividend is being given by the or issue declared by the company for a longer time of the period. So the return is definite, and the same kind of formula can be used for a preferred stock, because but it should be considered that this would be the appropriate formula for preferred stock, that is non-callable. So values future stream of dividend from now to infinity. So this kind of formula can be used for determining the value of a common stock if the dividend is paid for indefinite time period, and the same amount of dividend for a longer time period, for indefinite time period. सो जब हम जीरो ग्रोथ मॉडल को देखते हैं तो जीरो ग्रोथ मॉडल का जो फॉर्मूला है वो आपका परपेचुटी के साथ, जो परपेचुटी वो बॉन्ड है जो आपको सेम इंटरेस्ट ओवर द लॉन्गर टाइम पीरियड देती है, और इसके अलावा प्रेफर्ड स्टॉक जो नॉन कॉलेबल है, जो कंपनी कॉल बैक नहीं करती, तो वो भी बिल्कुल इसी तरह होता है, और उसका भी डिविडेंड जो है ना वो इसी तरह फिक्स्ड होता है। तो इसमें भी यही है कि आप जो हैं वो एक फिक्स डिविडेंड है, क्योंकि उसमें कोई ग्रोथ नहीं हो रही, तो इसलिए आप क्या करते हो, डिविडेंड डिवाइडेड बाय डिस्काउंट रेट कर देते हो, प्रॉपर्टी डिस्काउंट रेट कर देते हो, तो आपको उस जो है वो कॉमन स्टॉक का की वैल्यू मिल जाती है। Second discount model is dividend discount model is constant growth rate model. This is a model in which we are assuming that the dividend will go will grow in a fixed rate over a longer period of time. So what we will do is we will take the dividend for a first period, like not current, we will not take the current dividend, we will take the dividend of first period by compounded it with the growth rate, and divided by k minus g. K is actually the discount rate, appropriate discount rate, and g is the growth rate. So d1 is the expected dividend at the end of the first period. D1 is equal to D naught multiplied by 1 plus G, and D naught is the current dividend, and it accounts for all future cash flows from now to infinity. So this formula will help you to determine the value of common stock based upon its that assumption that if a constant growth would be there in the dividend, so how much amount they will able to recover from a common stock, or they will be able to get from a common stock if they invest in that common stock. So ये जो constant growth rate model है ना, इस इससे क्या होता है कि हम कहते हैं कि जी एक कंपनी है वो डिविडेंड दे रही है, और हम ये अज्यूम कर लेते हैं कि अगर वो 6% है या 5% या 7%, जो भी एक ग्रोथ रेट है, ये इससे अनलिमिटेड टाइम पीरियड के लिए ग्रो होगा। मतलब आज जो डिविडेंड हमें मिल रहा है, नेक्स्ट साल ईयर का जो डिविडेंड है वो इस आज से 5% ज्यादा होगा, उससे अगला 5% ज्यादा, उससे ज्यादा होगा। सो ये हम कहते हैं कि जी 5% से ग्रो कर रहा है। सो हम क्या करते हैं कि हम पहले पीरियड का डिविडेंड ले लेते हैं, मतलब आप उसको कंपाउंड कर लेते हैं एक पीरियड से, और फिर डिवाइड कर देते हैं उससे के से, जो के आपका डिस्काउंट रेट है, उसको उसमें से जी माइनस कर देते हैं। तो आप में इससे फायदा ये होता है कि आपको इन्फिनिटी के तक जो है ना, आपको पता चल जाता है कि अगर आप इसमें इस कॉमन स्टॉक में इन्वेस्ट करते हो तो आपको टोटल जो है ना वो कितना जो है ना वो अमाउंट जो है वो रिकवर होगा किसी भी कॉमन स्टॉक में। But when we are discussing different options for dividend discount model, there are certain implications associated with constant growth model. First one is stock prices growth at the same rate as the dividends. And secondly, stock total return grow at the required rate of return. And growth rate in price plus growth rate in dividend equals K, the required rate of return. So a lower required rate of return or a higher expected growth in division raises price. So this model is very sensitive to small variation in inputs. When there is a little variation in any of these things, so there would be greater changes in the model or in the values. So all these things has to be considered while we are considering this constant growth model. Now another model is multiple growth model, and why there is a need of this kind of model is that many companies actually grow at a very rapid rate, and and also for a number of period as well, but at certain time they slow down, or they can also give an average growth rate, or certain times there are companies who can pay no dividend for certain time of period, or they can pay the dividend for an early period, and after that they, due to a certain situation, they are not able to pay certain kind of dividend. So the constant growth model, which we have discussed in the previous slide, would not be appropriate for determining the value of that kind of stock. So in order to determine the stock of those companies which have different kind of growth models, or which have different kind of growth rates in different time period, we can use multiple growth rate model, in which we have two or more expected growth rate in division. One could be zero. So this would be two stage model, assuming growth at a rapid rate for n period followed by a steady growth, or it can be a 3 period, 4 period, 5 period, as depending upon that what kind of stock you are dealing in. So what you will do is you will make phases of those different growth periods, and depending upon that you will determine the value of a common stock. The following formula can be used for determining the value of common stock based upon multiple growth rate model. So first of all, the formula was used that we will determine the value of common stock, value of the dividend depending upon the growth rate, and after that what we'll do is we'll discount it, and the last period of the growth model would be constant growth. So in that case we will be using the constant growth formula, in which we will determine the value of the common stock, which will provide a constant growth for a unlimited time period, and we will sum up both these phases, and we will determine the value of a common stock. अब देखें, हम जब बात करते हैं ना कॉमन स्टॉक की, तो ज़रूरी नहीं है कि एक कंपनी के लिए सिचुएशन हमेशा एक जैसी रहे। ये भी होता है कि कभी कभार कुछ कंपनीज जो हैं वो कोई शुरू में कोई डिविडेंड नहीं देती, फिर उसके बाद डिविडेंड देना शुरू करती है, और फिर उन डिविडेंड में ग्रोथ भी देना शुरू कर देती है। कुछ ये केसेस होते हैं कि आप जो है शुरू में बहुत ज़्यादा डिविडेंड्स दे रहे होते हो, ग्रोथ भी कर रहे होते हो, लेकिन फिर ऐसे रिसेशन के हालात होते हैं या बिजनेस की सिचुएशन होती है कि आपकी जो डिविडेंड्स है वो फ्लक्चुएट करते हैं. सो इसके इन तमाम केसेस में जो आप हम कांस्टेंट ग्रोथ मॉडल की बात करें वो अप्रोप्रिएट नहीं होता. फिर उसके लिए आप क्या करते हो, आप मल्टीपल ग्रोथ मॉडल यूज करते हो. अब मल्टीपल ग्रोथ मॉडल में ये भी हो सकता है कि आप कोई एक फेज जीरो ग्रोथ का हो, लेकिन इसमें आप ध्यान रखें जब आप ये मॉडल बना रहे होते हैं इसमें आखिरी जो फेज होता है वो हमेशा कांस्टेंट ग्रोथ का होता है, क्योंकि आप मुख्तलिफ फेजेस बनाते हो कि एक फेज में जो है आपका 5% ग्रोथ था, एक फेज में आपका 0% ग्रोथ था, फिर आखिरी फेज जो है ना वो आपका कांस्टेंट ग्रोथ था. तो इन तमाम से आप वैल्यूज निकालने के बाद उनको आप आज के पीरियड में डिस्काउंट करते हो और फिर आप देखते हो कि इसकी टोटल क्या वैल्यू है और उसके मुताबिक जो है वो आप अपना कॉमन स्टॉक की वैल्यू डिटरमिन करते हो. ये चीज़ आपको मैंने फाइनेंशियल मैनेजमेंट में कराई थी और इसके अलावा मैंने उसमें भी करवाई है, कॉर्पोरेट फाइनेंस में भी कराई है. Then dividend discount model, multiple growth rates are used in this multiple growth model. First present value covers the period of abnormal growth. Second present value covers the period of stable growth. Like I have said that first phases would be your before the last phase, the phases would be the period of some or abnormal growth, and last phase would be the period which is of constant growth or stable growth. But there are certain limitations associated with multiple growth model. First of all, it's very sensitive to inputs. What is inputs? As we are inputting the value of dividend, the growth rate, and all these things. So they are very sensitive to inputs. Whatever you are putting in, it will give a different kind of output. Then difficult to determine how long abnormal growth rate will last. Because the recessionary period or the situation which is there is which is due to which there are abnormal growths are there, so it can be difficult for the analyst find out that how long this normal return assume, and then assume immediate transition to constant growth, and obviously as we are not in a position to 100% or accurately consider the translational constant growth rate, so it's also a very big limitation associated with this model. Now, what about capital gains? What is a capital gain? Capital gain is actually the result of sale and purchase of security, as when you buy a security at lower price and sell it at higher price, so you'll get a capital gain. Because many investors are sure that they'll not here forever, so they are really interested in capital gains, and they want to have capital gains. So dividend may be nice, but having low and selling high is wonderful. Since so many investors are interested in capital gain, which by definition involve the difference between the price paid for a security and the price at which the security is later sold. The evaluation model should seemingly contain a stock price somewhere. Thus, in computing present value for stock, investors are interested in the present value of the estimated price 2 years from now, or 6 months from now, or whatever the expected infinite holding period is. So we have to ascertain that what price would be there in future. So price received in future reflects expectation of dividend from that point forward. So discontinuing dividend or combination of dividend and price produces same result. अब देखें यहाँ पर हम जब बात करते हैं ना कैपिटल गेन की, तो कैपिटल गेन असल में ये है कि आप ये देखते हैं कि किसी भी कोई भी सिक्योरिटी आपने अगर परचेज की और अगर लोअर प्राइस पे परचेज किया और हाई प्राइस पे आपने उसको बेच दिया है, तो आपने जो है वो उस पर कैपिटल गेन किया है. और आपका जो इन्वेस्टर होता है उसको पता होता है कि वो हमेशा के लिए इस दुनिया में नहीं है, वो फॉर एवर तो नहीं है. तो वो क्या करता है, वो देखता है कि आपका जो है ना वो कितने डिविडेंड उसको कितने टाइम पीरियड में मिल रहे हैं, और फिर और कितनी किसी भी जो आपकी स्टॉक है उसकी प्राइस कितने मुख्तलिफ टाइम पीरियड पे क्या होती है. सो आपने कंपेयर करना है कि आप कितनी प्राइस पे एक स्टॉक को बेच सकते हैं और कितना उस पर डिविडेंड आपका एक्सपेक्टेशन है, उसके साथ उसको कंपेयर करेंगे। तो जितने टाइम पीरियड के लिए आप उसको रखते हैं तो इसका मतलब है कि आप पॉजिटिव हैं कि आपका इस पर डिविडेंड जो है ना वो अच्छा खासा मिलेगा। लेकिन जहां पर आप डिसकंटिन्यू करते हैं तो फिर आपका ये होता है कि आप चाहते हो कि जी यू डोंट वांट टू गेट द डिविडेंड, यू वांट टू हैव द प्राइस फॉर दैट security. So in order to select a certain stock for this kind of behavior, we can use this formula, that is k is equal to d1 divided by p naught plus g. So this equation says that expected rate of return on a constant growth stock is equal to the dividend yield plus the expected growth rate in dividend and price. So the later term can be thought of as the price change component or capital gain component. Therefore, an investor expected rate of return from a stock is the sum of the income component and the price change component, which together constitute the total return from a stock. Now, as we were discussing fundamental analysis, and we have discussed that that the company can use dividend discount models in order to assess the value of the firm, or in order to assess that what would be the most profitable opportunity in different type of shares in the share market. But we can also use other discount model including free cash flows to equity, which is actually helps to determine what could firm pay in dividends rather than what the company has actually paid. So in this case, what we will see is that what is the expected free cash flow to equity of the firm, which has different components like net income plus depreciation. We'll deduct any debt repayments, and we also deduct the capital expenditure, any change in working capital, but and add to it the debt issues, which will give us a certain amount of cash flow as we issue certain debts. So as we will calculate all the expected free cash flow, we divide it by K minus G. K is the expected return on equity, and G is the growth rate. So it will give us a the value of all the free cash flows to equity, and their value to, and we will determine the value of all these free cash flows to equity as of today. So it will help to determine the value of all these free cash flows to equity. Secondly, we can also use free cash flows to the firm approach, which actually helps to find out the amount of cash available to a firm before considering any type of financing options. So free cash flow is actually comprised of free cash flows to equity plus interest expense by deducting the tax rate, and add up any principal repayment, and after that we will deduct debt issuance and any type of preferred dividends. So we will get free cash flows to the firm, and which will help us to determine that what amount of cash is available to the firm before they'll go for any type of financing options, or getting finance from any type of source, whether debt or equity. It can also help us to assess the health of a company, and potentially what amount of return you will be expecting from that company. मतलब जब आप ये फ्री कैश फ्लो टू फर्म या फ्री कैश फ्लो टू इक्विटी देख रहे होते हैं, तो आप क्या देख रहे होते हैं कि कंपनी किस पोजीशन में है, और वो आपको, क्योंकि आप उस कंपनी में इन्वेस्ट करना चाह रहे हो, तो आप ये देखना चाह रहे हो, फ्री कैश फ्लो टू इक्विटी आपको हेल्प करती है कि आप ये देखें कि कंपनी जो है वो डिविडेंड्स में क्या क्या पे करेगी, क्योंकि आप फिर उस टाइम तक, जहां तक आपको लगता है कि वो आपके लिए अट्रैक्टिव है, वहां तक उसको रिटेन करोगे स्टॉक को, और फिर बाकी आगे जाके उसको सेल कर दोगे जहां आपको लगता है कि बस अब कंपनी जो है ना वो इतना पोटेंशियल डिविडेंड नहीं दे सकती। सेकेंडली, फ्री कैश फ्लोज आप देखते हो कि अगर एक कंपनी है उसके पास कितना फ्री कैश फ्लो अवेलेबल है, मतलब अगर वो कहीं से कर्जा लेने जाती है या अपने लिए कोई फाइनेंशियल ऑप्शन के लिए जा रही होती है, तो उसके पास कितना कैश फ्लो जो है वो मौजूद है, वो उस कंपनी का हेल्थ शो करती है, जो फिर आगे आपको इस चीज़ में हेल्प करती है कि आपको वेदर उस कंपनी में इन्वेस्ट करना चाहिए या नहीं करना चाहिए. Now, another important concept or another important aspect is intrinsic value. We'll estimate the value of stock today, which is actually derived from the estimating and discounting future cash flows. And when we estimate and discount future cash flows, what we will determine is actually current the value today of all these cash flows. So if that value is greater than if that value is greater than current market price, so we can hold that asset because it's undervalued, and if it is not with you, you have to purchase that asset. And if the value today is or the value which you have determined is less than current market price, the asset is overvalued and should be avoided and sold if held, or also or possibly it's kept for selling. Then if the value you have determined is equal to current market price, this implies that in equilibrium situation, and it shows that the value is correctly the asset is correctly valued. So whatever the case is, all those things are all those values or all those things we have estimated is depending upon approximation or forecasting. So they are subject to some error, but obviously, as we have said before, that we will try to have a good estimate, and we can make a forecasting, and we can consider more and more facts in order to make our estimation more accurate. मतलब इसमें अगर आप देखें ना, तो आपने उसकी इंट्रिंसिक वैल्यू डिटरमिन करनी है. किसी भी जो एसेट या कोई भी सिक्योरिटी है, उसकी जो एक्चुअल वैल्यू है उसको डिटरमिन करना है. तो उसके लिए हमने बहुत सारे फॉर्मूलाज देखे कि हम बहुत सारी कैश फ्लोज या डिविडेंड देखते हैं, उनको डिस्काउंट करते हैं, तो उससे हमें आज की वैल्यू पता चल जाती है जो भी आगे फ्यूचर कैश फ्लोज होते हैं उसकी. सो उसको हम कंपेयर करते हैं कि आज उस एसेट की मार्केट प्राइस क्या है, और उसकी बेसिस के ऊपर आप डिटरमिन करते हैं. अगर हमने जो वैल्यू कैलकुलेट की है वो आज की मार्केट प्राइस से ज्यादा है, तो इसका मतलब है कि वैल्यू जो है वो आपका जो एसेट है वो अंडर वैल्यूड है, और उसको अगर हम अपने पास रखेंगे तो ये हमारे लिए बेनिफिशियल है, और अगर हमारे पास नहीं है तो हमें उसको परचेज कर लेना चाहिए. लेकिन वाइस वर्सा सिचुएशन है, अगर तो आपके अपने जो वैल्यू कैलकुलेट की है वो कम है करंट मार्केट प्राइस से, तो इसका मतलब है कि आपका जो एसेट है वो ओवर वैल्यूड है, और इसलिए हमें उसको सोल्ड कर देना चाहिए. और अगर आप उसको सोल्ड नहीं कर अभी तो सोल्ड नहीं किया, तो उसको एक्चुअली आप उसको सोल्ड पे लगा दें, क्योंकि वो आपके लिए बेनिफिशियल नहीं होगा. और अगर जो है वो दोनों चीजें इक्वल हैं, तो इसका मतलब है कि आपका एसेट जो है वो एक्यूरेटली वैल्यू हुआ है. तो अब मतलब हम जब भी वैल्यू कैलकुलेट करते हैं, वो मतलब जैसे हमने फ्री कैश फ्लोज कैलकुलेट किए, हम डिविडेंड्स कैलकुलेट करते हैं, वो सारी चीजें एस्टिमेशन की बेस पे होती है, 100% एक्यूरेट नहीं होती. तो यहाँ पे जो एरर के चांसेस जो है ना वो हो सकते हैं. लेकिन एनालिस्ट जो है वो कोशिश करते हैं कि ज्यादा से ज्यादा ऐसी इंफॉर्मेशन इन तमाम चीजों में इनकॉर्पोरेट करें कि जो ये आपकी जितनी भी एस्टिमेशन है वो फैक्ट के करीब से करीब तर हो. As we have discussed different kinds of approaches in determining the value of a particular stock, so all those approaches which we have discussed in the previous slides, like dividend discount models, cash flow approach, so it measures the particular strength of a particular security, like how the security will going to perform and what would be its prospect and how the company will pay. So but this kind of approach, like PIP, price earning ratio or earning multiplier approach, will help us to ascertain the comparative performance of the stock, that we are comparing a company, a particular stock or share with the same kind of stock of the same industry. So it will help us to compare compare the performance, and we will get the relative performance of different securities. So price earning ratio is the strength with which investor value earning as expressed in stock price. First of all, you have to ascertain that stock price is an indicator that how the people are valuing your security. So we like if you have a higher price in the market, that means that people are willing to invest in your stock. So when you are assessing a particular security, you will and you are applying price earning ratio. So what we will do is we divide the current market price of the stock by the latest 12-month earning, that how people are willing to pay $1, or how the people are pricing $1 of earning is related to a particular security. And this kind of approach is very important and it is widely used in analysis. But while you are using this kind of approach, it's very important to ascertain many other aspects, like no doubt the all securities are working in the same market condition, but there are certain other consideration like consideration or tax policies of the country, or the accounting procedures of the company. Yeah, certain time the company is using very lenient kind of accounting procedure, which can have a bad impact in the future, or many other aspect. So all these things have to be considered while using this kind of approach. मतलब इसमें जो हम यूज कर रहे हैं ना, ये जो अप्रोच प्राइस अर्निंग रेशियो अप्रोच है, ये उस अप्रोच से डिफरेंट है जो हमने पीछे डिस्कस की थी, क्योंकि उसमें जो है हमने ये डिस्कस किया था कि एक पर्टिकुलर सिक्योरिटी है, उसकी उसका पोटेंशियल क्या है, वो डिविडेंड क्या देगी, वो कंपनी डिविडेंड क्या देगी, एक कंपनी है उसका कैश फ्लो क्या है, और वो क्या किस किस तरीके से आपको हेल्प करेगी, आपको आप उसको वैल्यू कर रहे हैं। लेकिन यहाँ पर हम क्या करें, हम मुख्तलिफ सिक्योरिटीज़ को आपस में कंपेयर करें कि अगर एक ही कंपनी है, एक ही स्ट्रेटेजिक पोजीशन में आप काम करो, एक ही रिसोर्सेज के साथ काम करे हो, आपका प्राइस अर्निंग रेशियो क्या है और दूसरी कंपनी का प्राइस अर्निंग रेशियो क्या है, और उसी से हमें समझ आ जाएगी कि आपको कौन सी कंपनी में इन्वेस्ट करना बेहतर है। और एक और बात, जब हम ये वाला अप्रोच यूज़ कर रहे होते हैं तो उसमें ध्यान में रखने की ज़रूरत है कि जब हम प्राइस अर्निंग रेशियो को देख रहे होते हैं तो ज़रूरी नहीं है कि अगर एक कंपनी है उसका हायर प्राइस अर्निंग रेशियो है तो वो ही फेवरेबल है। आप उसके अलावा उसके और बहुत सारी चीज़ें देखेंगे, लाइक वो कंपनी अकाउंटिंग प्रोसीजर्स कैसे यूज़ कर रही है, वो एम्प्लॉइज़ के साथ कैसी है, और किस तरह से अपने रिसोर्सेज को एक्सप्लॉइट कर रही है। तो क्योंकि कभी कभार ऐसा होता है कि करंट सिचुएशन में एक कंपनी है, उसकी प्राइस अर्निंग रेशियो तो हाई है, लेकिन फ्यूचर ग्रोथ प्रोस्पेक्ट उसके ज़्यादा नहीं है, या अगर वो टैक्स प्रॉपर्ली पे नहीं करी, या एक्सपेंसेस में जो है ना वो अपने आप को वो करी है, या अपने अकाउंटिंग प्रोसीजर्स प्रॉपर्ली अडॉप्ट नहीं करी, तो वो आगे जाके उसके लिए मसला बन सकता है। तो इन तमाम चीज़ों को कंसिडर करें जब आप ये प्राइस अर्निंग रेशियो वगैरह यूज़ कर रहे होते हैं। As we are using price earning approach, so by definition, or the formula used for price earning ratio is that current price is equal to EPS multiplied by current price divided by earning per share. So this formula can be used as P naught is the current price and E naught is your earning per share. So when we are valuing stock, it's very we have to forecast earning per share and price earning ratio, which and this ratio can be helpful for us, and we can compound this current earning and forecast the expected earning from that amount. And obviously, as we are investing in security, or where we are expected to earn in certain securities, so when we forecast all these earnings and earning per share, which will help us to determine that how whether to invest in that security is beneficial or not. So the expected price is equal to earning per share in the first period multiplied by expected price divided by earning per share in the first period. So this formula can be used for forecasting next year's earning or expected earning. Now lastly, we can discuss relative valuation, and as we have discussed, this relative valuation is used when the investor is really desperate to purchase a stock, and they want to have a active portfolio in their investment. So in that case, they will compare companies relative to their peers. Peers are the companies which are at the same strategic group and with the same resources. They can compare these companies stocks in order to determine that which stock is beneficial and which stock is more worthwhile for investment. So first of all, they can use price earning ratio, and higher price earning ratio can result from several factors, not all equally desirable for investor, like I have said before. So best used to make specific comparison. This, as I have discussed in the previous slide, that by considering certain other perspectives, we can consider price earning ratio and if the price earning ratio is higher as compared to the different companies, so that stock is better to be purchased or better to be invested in. But for that you have to make a certain consideration that is this price earning ratio is actually worthwhile, whether there are certain perspectives which are not very desirable for the company in future. So all these things has to be considered. After that you should invest in that security. Then another aspect is price to book value. So price to book value is first of all, it's we will consider the price and then stockholders equity, that what is the price of a certain security in the market and what is the shareholders equity. And these kind of comparison will be done with the companies which have hard asset or which have more fixed asset, don't have more current asset. So in this case they will be using this price to book value uh, measure. Now, another relative measure valuation method which can be used is price and sale ratio. There are certain companies which have erratic earnings or which have no earning, but still they are working working, and in that case we can use this price to sales ratio method to determine the potential of that kind of security. So price revenues per share over recent quarter would be used, and find out that whether the revenues are supporting enough, or the price are this ratio is beneficial for for investor to invest in that security. But additionally, when we are using this method, it's very important that we see that whether the company is working within the industry norm, or we can consider the different norms or different scenarios of the industry, and based upon that we can assess the performance of that security. Another measure which we can use in this case is economic value added. Economic value added is a measure which actually tell us that how much is the profits of the company, and what are the cost of capital, like how much you have invested in the company and how much profit the company is generating, or the security is generating. Because at this point you are comparing different companies. So you can see their economic value added, that how much capital is invested by different companies and how much they are earning from that. So they mostly see or emphasize on return on capital, that how much return or profits is generated by the the capital invested by a particular company. So these measure is important when you are making relative valuations.